Now we move on to our first panel discussion of the day. Please join me in welcoming our moderator for this session, Datuk Muhamad Umar Swift, CEO of Bursa, Malaysia. Ladies and gentlemen, now join me in welcoming our panelists today, starting with Chetan Seth, Asia Pacific Regional Equity Strategist at Nomura. Chetan, please join us on the stage. Next up, we have Anand Padmakanthan, Head of Regional Equity Research at Maybank Investment Banking Group. Anand, to the stage, please. And last but not least, Alexander Davey, Head of Client Portfolio Managers at Eastspring Investments. Alexander, welcome to the stage. Datuk, over to you.
Thank you, Roshan. A very good morning, and thank you for joining us today, gentlemen. Well, we've talked about growth. We've talked about an outstanding mandate for President-elect. Unexpected in some ways from what we saw in the polling. And now we move on to what does it mean for Malaysia and our markets. And Rajib nicely set the tone for us. And now as we move on, carefully curated questions. Now, as we see, we've got these comments around tariffs, trade war, immigration, imported inflation, what happens to bond market, a fairly broad conversation piece. And today, dear guests, we have a panel that we've curated that looks at Malaysia and also looks at the region as well as the world. And let's tease out a few of these themes this morning. Now, Chetan, as we move forward, how do you interpret the market's reactions following the Trump's victory? We've seen the Trump trade. It's the headline every morning and every evening as I get my feed. Were there unexpected movements similar in 2016? And what was the market initially? No, there was if you like, a pushback and the market subdued, and then it quickly rebounded to Trump's pro-business stance, which became clear in his victory speech. Do you think there'll be a similar pattern as we move into this year?
First of all, thank you so much. Good morning, everyone. And it's my pleasure to be back in KL. You know, I usually come here 3 or 4 times a year, so fantastic to be here. Now, I would say the biggest surprising element for me was that, you know, some of the widely expected Trump trades actually continue to carry on even after the election of Trump. That was a surprising element because if you look at the price action, even before we got the election results, you know, the betting markets were suggesting, and we did see a move in FX markets, in the dollar. We saw a move in bond yields. You know, bond yields were higher, and you know, U.S. stocks were also grinding higher. There was a move in Bitcoin as well, and even after elections, you know, some of these moves have continued to carry on. So if you ask me what was the surprise element, the surprise element was, you know, even, you know, now 1 week after the, you know, the results of the election, and moves are still carrying on. But as far as price action is concerned, I mean, as I said, dollar higher, bond yields higher, you know, we've got Asia FX, which is weaker. I would say in Asia stocks, you know, Hong Kong, China clearly has underperformed, but some other parts of Asia have actually been more resilient. And then, of course, the big move we've seen in like crypto, Bitcoin is up 27%, you know, since 5th November. And now we've also seen, you know, with that US stocks also like small caps rallying. We've seen Tesla's rallying. We've seen clean energy stocks actually decline because there's obviously some concern investors have that, you know, some of the provisions of the IRA might be repealed. So short answer is, you know, the surprising element is that this price action has carried on. And I mean, deeper somewhere in my head, I did have a concern that maybe this would be a typical sell-on news event, but it hasn't really materialized. And I would say I do question, you know, if some of these trends can persist. If you just look at what my competitor from JP Morgan just said, you know, there are a lot of challenges actually.
Your colleague, not your competitor.
Yeah. So, yeah.
No, thank you. Anand, Malaysian market,
Yeah.
Price action first few days. Any surprises for you?
Yeah, it was interesting. I mean, I think it was confusing for everyone in terms of the extent of the win for Trump and the Republicans. And I think the initial market reaction was sort of like, okay, Dow Jones is reacting really positively, so let's go up as well. Although the drivers for the Dow Jones for the U.S. market in terms of a Trump win, no bearing whatsoever on Asia, right? It's going to be stimulative. It's going to be pro-growth in the U.S., potentially at Asia's cost, from tariffs. So it didn't really quite make sense. Some of the sectoral movements made most sense. So like the glove sector rallied, because the feeling was, okay, Trump's going to whack even more tariffs on the China glove players. Bit of a short-term thing, because medium-term, the Chinese are just going to flood other markets with their gloves, and we're going to potentially be back to square one. Tech sector rallied. I think for Malaysian tech stocks, like Rajesh said, being part of the supply chain is a good thing. But there's a very immediate impact as well from a stronger US dollar, because if we look at stocks like Inari, Vitrox, Great Tech, most of their revenues are US dollars. About half their costs are ringgit. It's a very easy margin trade. But beyond the initial action, I'm actually quite cautious, concerned. I think I'm quite informed by my trip to the US about a week before the elections. I spent about 8 days there meeting clients in blue states, red states. I got to talk to fund managers, Grab drivers, or Uber drivers in the US. And the psyche is quite worrying in the US, I think. I've never seen it like this in the 20 years I've been there. There's a lot of, I think the word that encapsulates the sentiment in the US to me from my trip is aggrievement. There's a lot of, aggrievement about the world taking advantage of the US. Free riding on the security umbrella provided by the US, free riding on manufacturing, being hollowed out in the US, consumer market of last resort being the US, just sell it to the US, they'll buy it, huge trade deficits. And of course, uncontrolled immigration now, illegal border crossings. My colleague in New York, which is a super solid blue state, and he's a fund manager, he was like, I don't know what we're doing now. We're putting up illegal immigrants in hotels in New York and giving them iPhones while we process their applications. It's crazy. I'm pretty sure he voted for Trump as well. So, I say all this because it tells you that the US sentiment has changed in terms of how they're going to negotiate. They are much more hard-nosed now. They've reached a tipping point. They don't want the world to take advantage of them anymore. And that worries me, especially for Asia, because we've been a big beneficiary of the US security umbrella. Most Asian countries run huge trade balance surpluses with the US. Malaysia is one of them, but it's not huge, and it's not as bad as Vietnam or Japan or Korea or Taiwan. But the point is this, I think we have to be cautious, and our positioning in markets like Malaysia have to be a bit more defensive while we wait for more indications of when tariffs will come. And I agree, they could come quite a lot sooner than we expect, because if you look at Trump's policies, one big part of it is tax cuts, personal income tax cuts. Who's going to pay for that? It's meant to be tariffs. Yeah, so you want to do that, you've got to get tariffs in place first. So he has to move fast. So I am a little concerned.
Thanks, Anna. Just picking up on a trend, I know you're being patient, Alex. We'll come across just shortly. Rubber gloves, for example. You put in a tariff, and you mentioned China will then, quote, dump to other markets. Will there be a tit for tat? Do you see, I'm thinking, is there an escalation from a world trade perspective where, say we start dumping in Europe, and then the Europeans say, well, maybe that's just not on as well, and you see this escalation. Is there a chance of that? Very real.
Me? Yeah. Well, I hope not, because the last time that happened, it sort of caused the Great Depression, the Hawley-Smoot Acts, reciprocal tariffs in the 1930s. No, I think this is how it's going to play out. China will get hit, and the US will say, all right, we've done this to China. You guys, get into negotiations with us on a unilateral basis. I don't think they'll negotiate with blocks of countries unless we insist they do, like ASEAN. Because that gives them the greatest bargaining power. They'll say, we've done it to China, we could do it to you because your trade surplus is ridiculous. Why aren't you buying enough from us? And then we'll negotiate, and we'll see where we land. But I don't think it would be in, say, Malaysia's interest to slap reciprocal tariffs on US goods. We're just not in that bargaining position to do that.
We're a trading nation. Alex, we move nicely into geopolitics. How, from your perspective, how is Malaysia balancing its relationship with both the US and China? And what are the potential economic implications of that balancing act?
Yeah, I mean, I love the last question you asked because it's right in Rumsfeld territory, isn't it? The unknown unknowns, and I think that's pretty important right now. I would contend that I don't necessarily think Trump knows what he's going to do from one day to the next. So that's not necessarily a cohesive strategy. We can contend that there will be some form of move around tariffs. I think if you are an economy like Malaysia that is investing for the future, has been looking to grow, is engaged in areas like the RCEP where that as a trading bloc is EU-sized, if not bigger. You've actually got size on your side. You've actually got the ability to develop further. Yes, you're going to be hit by changes to the international agenda. The contention is, where are you hit? You aren't China. So you're not hit directly necessarily with the heaviest tariffs. You're a beneficiary of China +1 at the moment. Mm-hmm. So actually, you've probably got a period where you've got the lovely disconnect between stock market action and the real world. In the short term, stock markets are voting machines. In the long term, they're weighing machines. And in the short term, we're seeing a lot of the voting at the moment. What we would expect to see, and it chimes with my colleagues here, is that you start to see a degree of separation between policy announcement and what is actually being seen on the ground. And I think that is the challenge for a market like Malaysia, is to say, we've got a lot of really good things going for us at the moment. We've developed really strong infrastructure. We are knocking the ball out of the park in terms of FDI into manufacturing, 175% increase over an 18-month period. These are things that we have to try and follow through whilst we've got noise, because those benefits will continue downstream. You can then adjust as an economy and as a company to what you're seeing, and you can pivot as needs be. I think that we underestimate the benefit of regionalization, not as a bulwark to Trump, but as another medium of trade that will sustain itself regardless of the fact that the US is a major trading partner.
Yeah, there's an interesting theme about the development of ASEAN as its own regional market. It's a large enough market in its right. And as we continue to grow as a region, that will drive. But moving back to the topic, Anand, how would you describe, in your mind, the current state of US-Malaysia trade relations, and will the election outcome influence the direction of the US-Malaysia trade policies?
Yeah, no, I think it's pretty cordial. I think, the facts speak for themselves. Tan Sri White mentioned this before, lots of US investment into the US, into Malaysia still. And that's not as a news story, that's been quite consistent over the last few decades. And we continue to, a very important part of that is that we continue to, tread the middle line. We're very neutral. We focus on good governance to make it as welcoming as possible for US FDI and all other FDI. I mentioned we do have a sizable trade surplus with the US, about 25 billion. But if you look at the what the US considers currency manipulator indicators for countries, Malaysia doesn't satisfy the three indicators. Current account surplus is below 3%, so that's fine. We don't, intervene in the currency market to, weaken the currency. I think, unfortunately for us, the ringgit does it all by itself. So, we don't have to do that. So, I think the US hasn't got a major bone to pick with us. Yeah. So I think we're okay in that perspective.
Other than tariffs, what else could the new administration do to bolster its economy, so to speak, Anand, in your mind? Anything that jumps to mind other than tariffs?
Sorry, the Malaysian?
No. From a US perspective, do we anticipate more tariffs or alternative measures they could adopt? Because we've already seen changes to existing tariffs, renewable energy, chips, etc. And what could we do as a nation to prepare for that?
Yeah, I'm not sure what else is on the agenda besides tariffs. as I said,
Well, that's the easy
yeah,
reach at
Yeah,
this
that's the
point in time.
easiest one to do, and it's most quantifiable. Influencing U.S. business lobbies in terms of how they deal with Malaysia could be the other avenue, because obviously, U.S. Chamber of Commerce here, Trump administration could ask them to take a harder line or a softer line. It depends what they want them to do. But clearly, as I mentioned before at the start, this administration, I feel, is going to be very hard-nosed, very pugnacious. They won't be afraid to break a few eggs to get what they want. And they've got Musk, who's very savvy to advise them as well on business-level issues. So yeah, I think that could be the other avenue. They could talk to investors in Malaysia to start pressuring the government in other ways. Yeah.
Alex.
Sorry, government efficiency has to be an oxymoron in the US context. It really does. I'm intrigued by what the US could do beyond that. Reshoring is the thing that just immediately flicks in my mind. It's not a quick strategy to try and reshore. If you think about the semiconductors, as a panel after, I'm sure we'll have a lot of focus on this, but it isn't quick to try and take that degree of technology, reshore it to the US, create manufacturing hubs, you've already got employment in the US at a structural low. Where do all the individuals for that? Where does the skills, where does the labor come from? So I'm not sure there is a lever around that, much as there is a desire to bring things back to the US, and then you start to get onto presidential terms. Sounds ridiculous, but how quickly can you do that when you've got 3 to 4 years before the next person's in?
No, true, Alex. I mean, structural changes and reshoring is exactly that. You need skill sets, it builds time. And as you quite rightly said, the term is as long as the term is. Now, I think that moves into an interesting, and we were just touching on ASEAN as its own market, its own engine for growth. Alex, heightened geopolitical risk, trade protectionism. What can Malaysia do as ASEAN chair in 2025 to, one, navigate its risks, and also for ASEAN as well? Any thoughts?
Yeah, I think they have to be a strong chair. I think that's a balancing act. As we've said, you've got a very volatile character in terms of the leadership in the US, but there is between ASEAN as a key part of our CEP, between BRICS, which I believe I'm sure we'll come to as well as kind of global South. There's a chance for a strong degree of leadership to try and create a demonstrable bloc that is non-US and is beyond, is into that Asia context. And the pivot of trade that we saw, where ASEAN has become a far bigger partner of China and China of ASEAN, to me is the direction of travel. It creates meaningful distance. And if you continue to strengthen that natural progress, it would put questions in the mind of some of the developed economies of, well, you have got a very strong trading bloc beginning to develop. If you tack on that global South and you add in India and you start to consider China, that's a very, very big counterbalance to the US or G7. And when I look at G7, it's the US and some pretty ailing economies. My own home one being one of them, the UK, the fast-growing emerging market that it is. But aside from that, you've got Germany about to have a second year of downturn, pretty unheard of. Germans run very, very tight balances. So, Germany, Italy, UK, it's not exactly a core list of thriving economies. Whereas, you look at the list, if you're starting to think about ASEAN, you're starting to think about BRICS, and leaving some of the geopolitical elements aside, you've got some real dynamism there. You've got a lot of natural resource. So I think the key on the question you asked is, it's incumbent on Malaysia to lead, but to lead almost in a dignified fashion. This is the direction we need to take. We need to show good strength, and we need to show vision, but we have to be aware that confrontation is probably not going to assist that. Difficult line to tread, but I think critical to moving things forward.
Oh, thanks, Alex. can we use policies, Alan, such as NETA and New Industrial Master Plan to sort of mitigate risk, maybe JSSEZ, we love acronyms, a new special zone? I mean, how...
Yeah, sure. No, yeah, so ASEAN, for Malaysia, all these roadmaps are fantastic. I think we've, as Maybank, we've written a lot of positive commentary on things like the NETR and NIMP. National Semiconductor Strategy is a good one as well. I think it's all about execution, as it usually is when Malaysia announces plans and roadmaps. But as the plans stand, they make a lot of sense. Now, Johor Singapore Special Economic Zone, it falls back on what Alex just mentioned about leadership, right? ASEAN, we've come a long way since 1967 when it was formed, and a lot of progress, cross-border payments, open skies agreements, reduction of tariffs to zero intra-regional trade. But still, our cohesiveness, ability to project to the world as a collective rather than as individuals, still very much lacking. Still very much feels just like a circle drawn on a map. A bunch of countries happen to be together in one part of the world. Johor Singapore Special Economic Zone could be a way for Malaysia to project that leadership that Alex talks about by inviting ASEAN to play a bigger role. We don't differentiate at the moment between ASEAN FDI and FDI. We don't treat ASEAN as special. I mean, we can't expect the world to take ASEAN seriously if ASEAN doesn't take ASEAN seriously. So I think Johor Singapore Special Economic Zone, we should look to give ASEAN FDI preference. Fiscal incentives, human capital mobility. People like DBS, they want a banking presence in Malaysia. Why don't we give it to them in the zone? Make the first move, and other countries will reciprocate, and we can become more ASEAN. And that has a strategic purpose as well. If you look at ASEAN, you compare the bloc to, say, the EU or NAFTA or whatever it's called now, USMCM or whatever. The levels of intra-ASEAN trade and intra-ASEAN FDI are way below those economic blocs. We don't use enough of the potential within ASEAN to increase the buffers against externalities like the US or China misbehaving. And that's our own fault. So I think we should work on that. I think Malaysia, spends a lot of time talking about BRICS, CPTPP, which not all ASEAN countries are in, unlike RCEP. But perhaps next year we should refocus on ASEAN, talk a lot more about ASEAN, and put some actions to our words.
Just building on that theme, Chetan, how do you see Malaysia position in the context, not just ASEAN, but as the region? Supply chain relocation, China plus one, our efforts to remain neutral, if you like?
Yeah, I mean, from our perspective, I would say, I think Malaysia, generally speaking, is quite well positioned. I mean, I heard Anand say, I think he seems to have a cautious view on, I guess, markets. But from my vantage point, I look at regional markets in Asia. I think, relatively speaking, I think Malaysia is still quite well positioned. And I think the numbers speak by themselves. Like, I mean, if I just give you one number, FDI, realized FDI in Malaysia on as of second quarter 2024 is 3.2% of GDP. And if you look at that number in comparison to, say, India is 1% despite all the rhetoric around supply chains and all. I'll give you another data point, and Nomura has published a lot of stuff on that. If you look at just this entire theme of supply chain shifts, so what our team did was we looked at literature, we looked at all the company announcements around companies looking to move production to Malaysia and then the data is the following, that we found 130 such examples of companies between that those announced these measures between January 23 until, let's say, May or June, and around, I think, 14, 15 companies were in Malaysia. Predominantly, the big ones were in India, 28. So, I think there is a lot of evidence that Malaysia is benefiting. So you've got this supply chain relocation theme. On top of that, I think this entire theme around AI and data center infrastructure is quite a compelling one. And the way I look at Malaysia is that, look, the electronics industry has already been in Malaysia for last 3-4 decades. Malaysia generates sizable net balances from this industry. For me, AI and DC or data center theme is essentially just complementing that industry which already exists in Malaysia. So I would say it's quite well positioned. I mean, you all also said that, Malaysia, I view Malaysia as largely neutral. I think they're trying their best to actually balance both US and China. I mean, I think PM was in China a few days ago. So I think that's positive. I mean, if you just look at some of the core, I guess, ingredients of success for countries, I think that on those metrics also, Malaysia ranks quite well. High education standards, very good infrastructure. Malaysia infrastructure is clearly much, much better than Indonesia, Philippines, or even India for that. I mean, absolutely, there's no doubt about that. Rule of law, ease of business rankings for Malaysia is quite well. So from my vantage point, I mean, I think, it's well positioned. And if anything, I think this entire theme of China plus one or supply chain relocation will only see an acceleration. If we start talking about a world where there'll be more trade protectionism, more tariffs, I would say from a relative standpoint, I'm quite positive on Malaysia. Yeah, absolutely, on an absolute basis, yeah, I mean, it's not great or may not be great, but relatively speaking, there could be opportunities.
I mean, moving the lens a little bit broader, if we think about the financial implications for the region, what are your thoughts? I know you've been doing a roadshow, you've been engaging.
Yeah, I mean, so the financial implications are the following, right? I mean, clearly, as a house, we expect that, and JP Morgan also said the same thing, that, look, we'll see potentially lower growth. I would say our numbers from Team Nomura is slightly on the, our numbers of potential negative impact on growth is lower than JP Morgan. So, for example, in China, we're expecting a 40 bips impact on 2025 GDP growth. In the case of Malaysia, we're expecting around 10 bips or 20 bips. So we are somewhat, I would say, less concerned compared to, let's say, JP Morgan. And our thinking on that is why we are, I guess, less concerned compared to our competitors is that, our understanding is that, this tariffs and, is not necessarily new. This really started in 2018, 2019 when the trade war happened. And there is clearly evidence of companies already relocating. So I think this time around, there is a little bit of a buffer. I would say there's a little bit of a less shock factor as well. I think people, companies, governments, businesses are better positioned. I think the infrastructure is there to, to be able to mitigate, these very, I guess, aggressive set of tariffs if they are put in place. So from a growth standpoint, clearly lower growth. I mean, for Asia, we actually think that you will possibly see lower inflation rather than higher inflation. Now, US may see clearly higher inflation, but for Asia, we think it will be lower inflation. And partly our view is that, look, commodity prices will probably be slower. Assuming China doesn't do a big stimulus, oil prices will possibly be lower. And then there is a possibility that, if you take the base case that we're going to see higher tariffs for Chinese imports by the US and also, let's say, 10% across the board tariffs, there is a possibility that some of the excess capacity of China might actually be routed to Southeast Asia. And there's clearly there's clearly evidence and there's clearly concerns you can see, even in the case of Malaysia, where, we put a tax on, kind of low value added products. Indonesia is trying to do some of that stuff. But again, to a point which was made earlier, I think Anand made that point. I don't think that any of the ASEAN countries can go aggressively against China to put reciprocal tariffs because clearly there's no bargaining power. So inflation, we think somewhat lower, slower growth, and higher for longer. Not higher for longer, but I think we can expect fewer Fed rate cuts. And that means that has other implications for our part of the world. I think central banks in our part of the world will probably have to go slower on rate cuts. Now, Malaysia, we are not expecting any hikes or cuts. We think it's on a neutral. But interestingly, as a house, we've already made a view that we think in 2025, Fed will only cut once. Nomura has made that call, and on the back of that, in some of the ASEAN countries, like for example Indonesia, where we were expecting 100 bips of rate cuts, we are now expecting only 50 bips. So I think that's the other part. And for stock markets, I mean, if you have an environment of lower growth, that's not necessarily good. And I think we'll have a specter of this tariffs, which will kind of become an overhang. Yeah, I mean, I would say from my vantage point, we have a fairly kind of neutral view on stocks. I mean, I won't say we are bullish, but within that context, we do see a lot of opportunities. Happy to go over that, but yeah, maybe I'll...
Well, thanks, Chetan. Growth, the man with the checkbook, Alex. Global investors have been warming to Malaysia this year, and our KLCI has had a good run up, about 12% year to date, as of November. With the election outcome, in your mind, derail this rally? Will the view of foreign investors towards Malaysia change, or will it improve?
A few bits to unpack there. Maybe let's reverse this. The view of foreign investors, Malaysia would be a very specific asset allocation call for a lot of foreign investors. I could, to take a quick pen portrait across the world of big asset blocks. In the US, you've got the institutional asset blocks that work in two ways. The US, not the US. Mm-hmm. Okay, so that is a lot of money, but it tends to invest in global ex-US or emerging markets. And it's been structurally underweight emerging markets for quite a long while, and you can see why with the performance of markets like the S&P 500. The wealth management segment is slightly different. They tend to allocate globally a lot more into regional building blocks, and we could easily talk about why that is, but the main reason is to differentiate from each other. Now, as soon as you start to differentiate by regional building blocks, then Asia becomes unlocked as a building block. And if you look at Asia as a building block, PE, PB, doesn't matter. It looks really undervalued versus the developed markets, which are highly US influenced, and the US. So if we take that as the starting point, you could contend that at some stage, as an investor, I must want to invest into Asia. I must want to invest into emerging markets, because the upside for me, when I look at the stocks and I look at the valuation opportunity, is huge. Versus buying tech stocks in the US, where to do that I have to contend that the US just powers on regardless and valuations don't mean anything. So it's difficult. It's very, very difficult. But, and there is always the but in this, is the problem here is, for a lot of investors, a stronger US dollar, which let's remember was pretty much nobody's base case 12 months ago. So base case for everybody was, we're on a downward roller coaster with the Fed, the dollar's going to depreciate, emerging markets and Asia are off to the races, this will be great. Then we get...
trade, off we go.
Yeah, exactly. And, carry still definitely, I think, could be very interesting in fixed income markets going into next year, but a little bit more differentiated. So if we look at this, we've got fantastic stocks in Asia. We've got fantastic stocks in Malaysia. We've got undervalued stocks in Malaysia. We've got undervalued stocks in Asia, regardless of a rally in the market. The foreign investment will be a trickle rather than a stream at this stage, because it's going to be impacted by a stronger dollar. It's going to be impacted, I think, by some of these asset allocation calls and macro concerns. You're now down to the short term, that is the implication. Long term, Malaysia, Asia, emerging markets are terrific places to be invested. They've got massive long-term potential. And I think this is the bit that is always awkward if you sit on a stage talking about President-elect Trump versus sit in front of your pension fund or whatever and say, I've got a 20-year view, where do I want to invest it, versus I've got a 1 month view based on what's happening right now, where do I think is problematic? And there is the disconnect. So I think there is plenty of headroom for Malaysia, plenty of headroom for Asia. The challenge in the short term will be volatility. The challenge will be what happens with tariffs. The challenge will be the dollar. And the challenge on a global perspective will be what happens to inflation. I don't see a scenario where we don't get spiking inflation. I don't necessarily worry about that being overly persistent. the fact that, as we've already had alluded to by Chayton, most people are seeing a much shallower path for US rates gives, a little bit of room for manoeuvre. But I do think we go into a volatile period. Those tend to see, the nominal returns on markets being a little bit lower, but the differentiation at a stock level being a lot higher. And so that's really, I think, the way that we see that. It's a lot about looking at the stocks. It's a lot about the influence and impact. And it's just being comfortable with the fact that 2025 will be volatile.
So it's sector and tenure, really, to a large extent.
Very much so. And it will, a lot of people will probably prefer some defensives in the short term, unless they are just prepared to say at some stage, it's lock away in the bottom drawer, I don't care, I'm not going to look at the price.
Depends on how the fund manager's compensated, I suspect, Alex. If you're chasing alpha, I've got a rough idea where you're going to be. But that's a chat for another time, and we can talk about ESG as well there.
Yeah, you were telling me to buy Bitcoin earlier.
No, we don't like Bitcoin at Bursa. We see it as highly volatile and not a real product.
Absolutely.
But that's a conversation.
That's a very, very sidebar.
Yeah, I was going to ask who's allocating assets to Bitcoin, but we won't. Anyway, so getting back to Chetan, Nomura in its recent reports highlighted the Malaysia equity market, alongside India, might prove to be a safe harbour in a Trump 2.0. Could you expand on that? Because we found that quite interesting.
Yeah, I think some of the points I already alluded to, but like when we assess different Asian markets, our framework is looking at like 6 or 7 factors, right? So one is FX. Generally speaking, North Asia will be more vulnerable. The North Asian FX should be more vulnerable compared to, let's say, ASEAN FX, because if you're talking about tariffs and all, I think Korean won probably will have a problem. Clearly renminbi will have a problem. So that's one. The second impact is, positioning, right? Like, what do investors generally own? And on that metric, I think Malaysia stands quite well positioned. Despite a good run in Malaysia stocks, foreign ownership of Malaysia is still quite low relative to other markets, right? Where I tend to differ from my competitor at JP Morgan, and again, just bringing that point again, we actually think that, a market like Taiwan would be more vulnerable. I think JP said Taiwan would be okay. And our view is that, like, on geopolitical, let's say, for example, Malaysia is neutral. If anything, I think there's an advantage there. But Taiwan could potentially be more exposed to more geopolitical tensions. I think Trump in his rhetoric has already spoken about potentially withdrawing some sort of defense support from Taiwan. And I think once that happens, and I'm not too sure whether it will happen or not because a lot of stuff is unknown, you could see a risk on Taiwanese assets. But coming back to Malaysia, if you look at the index composition here or the impact on corporate earnings, I don't think so there's much impact there. I would argue that there are themes or sectors which are leveraged to themes which have less to do with tariffs and all. So for example, this AI, DC, data center investment boom will, in my view, continue whether you have tariffs or not. I think the hyperscalers in the US will continue to invest so long as they feel comfortable investing in this part of the world. So index composition, not a problem. Positioning is quite light. FX is a bit of a problem, but even Indo will have a problem. Philippine peso will also have a problem. Positioning is quite light. So, and then of course, as I said earlier, on the supply chain bit, there is a benefit which some of these countries will get, and we think it's going to be India, Malaysia, Vietnam, and to a certain extent Thailand. So, when you score on this framework, actually Malaysia ranks quite well. And so in Southeast Asia, it's actually one of our preferred markets. And if you look at 2018, 2019 trade war, and I was doing markets then, we did have elections here and there was a lot of volatility, but still Malaysia did okay in a regional context because Korea, China, all these markets went down a lot. So history also suggests that there is Malaysia could just be, one of, again, typical safety market. It may not make a lot of money, but it probably will also not lose you a lot of money.
No, thanks for that. From former May banker to a May banker, a current May banker rather. The question on everyone's minds, we saw the performance of the ringgit dip a little bit. as people to profit from my market as well. What's the direction, Anand, for the Malaysian ringgit?
Yeah. Well, before I get to the ringgit, I think just to add from our perspective from Maybank, when we look at ASEAN, we also like the Singapore market, actually. We think it's going to be quite defensive in the months to come. A couple of reasons. One, it's always been sort of a safe haven attraction in times of volatility. If you look at some of the fundamentals as well, it's got a free trade agreement with the US, so that's some sort of shielding. Also, it runs a trade deficit with the US, so it's not in the targets of the Trump administration in terms of righting some huge imbalance in trade. And some good quality companies there which can give you sort of exposure to the supply chain relocation thematic, the China Plus One thing. Last couple of days, Singapore banks have been reporting fantastic results. Their stocks are at all-time highs. Wealth income is increasing quite dramatically, and we expect that to continue. But more importantly, Singapore banks offer something that other ASEAN banks can't offer. They offer a regional exposure with US dollar funding basis. So if you are relocating to the region, Singapore banks can offer you a lot of advisory and a lot of actual funding as well. Yeah, so I think Singapore banks are probably something we want to take a closer look at in the months ahead as being a safe haven. Now back to your question on the ringgit. We actually did write something on the ringgit yesterday from our FX head. I think it's pretty obvious that we're a lot more sort of cautious on ringgit direction now as compared to pre-elections. The dynamics are very simple. I mean, strong US growth, high inflation dynamic, not good for rate direction. It's going to be stubbornly high, we believe, in the US. So not as many cuts as Chetan said just now as well. So strong dollar. We're looking at about a 4.45 level for the US dollar into the first half of next year against the ringgit. So I think it really depends, what happens next in terms of tariffs. But generally, my perspective is probably a weakening bias for the ringgit right now. The other corollary for Malaysia, which doesn't apply to all ASEAN countries, is our dependence on oil and gas. So that's about 20% of government revenues, right? Now, Trump has said he's going to increase energy production in the US dramatically. So we expect energy prices to fall. So that has some repercussions for our fiscal position as well, and the attraction of the ringgit. So to me, the odds are kind of a little bit stacked against the ringgit right now, so I would expect, a weakening bias.
I appreciate that. Now, the question I think everyone's mind, Chetan, what do you see as the opportunities across the region, and how should investors be positioned now?
Yeah. So, well, there is a base case. The base case is that let's assume there will be tariffs in place sometime in the middle of 25. That's our base case, right? But I'm going to just caveat it by saying, and I think the statement is quite important that, I think just looking at how the markets are behaving, and I think that's a comment I made earlier also, it seems to me the market is speculating that, we'll have a red sweep. It's almost certain. Trump is going to put 60% tariffs, 10% across the board tariffs. And the reality is that we just don't know whether it's going to happen, right? And if there is any reversal or some of that rhetoric, or the policies are milder, some of this recent price action might reverse, right? That's the caveat I'm giving. But in general, if you take the base case that, look, the world is going to be much difficult next year, the one clear idea is anything which is domestically oriented in the region is probably a safety trade. And, that includes banks. And I would say I agree with Anand. Singh banks look pretty okay. Malaysia banks are okay. I don't think so there will be our view is there's not going to be much impact on GDP growth of Malaysia. So long as Malaysia growth is okay, I think credit growth will be okay. On top of that, you'll get, continued investments from the US hyperscalers. So I think that part is okay. I think parts of Malaysia tech are also quite interesting, especially with ringgit no longer appreciating. Stocks have been hammered. I think that's another way to look at. But, across the region, you can find opportunities as well. We think the markets, like Southeast Asian markets are generally better positioned. So India and Southeast Asia over, let's say, North Asia in general. We also think that, there are, if you just within ASEAN but outside Malaysia, let's say, for example, Thai tourism stocks, whether it's medical tourism or anything which is geared to international tourism, which could be played through consumer plays, consumption-related stocks, is also quite interesting because I would argue that, whether you have tariffs or not, I mean, people will still go to Thailand and they'll spend money there. I think, you won't see a big impact on tourism there. I think that's another area. Of course, very domestic-oriented stocks like telcos in the region. There's some of these telcos are still giving you very handsome dividend yields. Some of those companies are there in Singapore. I mean, across the region. In India, you can find a lot of domestic-oriented growth stocks. It's a huge market. There are almost like 350 stocks in India which trade more than 10 million a day. For Malaysia, that number is around 12, 13, depending upon how you look at. So you can always find a lot of opportunities there. I mean, India has other kind of near-term issues, but there are ways to play it. But I would say the short net message is like India, ASEAN, better position in North Asia, domestics over exporters, and within ASEAN, you can find a lot of these idiosyncratic themes, to kind of mitigate the risk from these tariffs.
Alex, election results changed or influenced your allocation strategy, or you stayed pat for the moment as you see the trend develop?
Long-term allocation strategy, not hugely. Picking up on some really, really interesting things from Chetan there. I don't see that a number of the key themes have changed a lot. And when I'm talking about that, I'm thinking about Asia, but particularly ASEAN. ASEAN has one of the youngest populations around. It's only a year older than India. You're talking kind of very early 30s. You've got a huge growing middle class. So that idea of domestic and or intra-regional consumption is very high. You've got a great workforce. You've got a lot of skill sets. There's a domestic focus in a number of economies on high level of upskilling and education. It's very difficult. It's very easy to be flippant, look at a geopolitical event and ignore this. But actually, if you're thinking about exactly the points that have been made, what's going to drive individual stocks, and we've talked about this a lot, this is the ability of Asia to be for Asia and actually be able to drive that demand. So those play out. Now, the areas where it's more problematic are climate change and green energy. And there is a lot of focus, electric vehicles, provision of minerals towards EV. If you have a US that decides to step out of the Paris Accord, if there is more fluctuation around that, that certainly has an impact around EV. It has an impact around batteries towards that. It could have a technological impact. So there's a few of the sectoral areas and or broader thematics that still look very interesting medium to long term, but could have initial challenges. As I said, I think for us in terms of, if we were looking at that from a multi-asset portfolio, we'd be a little bit more cautious at the moment. We're going to be looking at how portfolios could be implemented in the short term by the switches around the direction of Fed funds rate, the volatility we're seeing in fixed income, the upside for various markets, and just this immediate reaction to tariffs. So there's always that interplay of just maybe decreasing or accepting where that volatility is going to come in the short term. So that's created a little bit of an impact on broader portfolios. For equities, you're 100% fully investing. Well, maybe we'll be looking a little bit more higher dividend stocks. We're going to be looking at slightly more defensive. We're going to be looking at stocks that have a high degree of barrier
Bursa,
to it.
very high dividend yield.
Yeah.
The payout ratio.
Yeah.
I mean, no, 1818. Yeah. Just remember the code for your Wi-Fi.
You heard it here first.
Yeah. Proxy for market. No, I'm just leading it. I'm just teasing.
I also feel I should be incumbent to me to say the words at Eastspring, just because everybody else has been saying their company name and I hadn't. So at Eastspring, we've been investing very fully across equities, fixed income, multi-asset portfolios, and of course, Asia is pretty core and key to what we do.
Thank you. And
I just felt a bit left out. It's just a blatant plug, really.
I'll be fair. You're the only house I didn't have a plug for built into the script. Speaking of plugs, Anand, sectorial winners post-election. So first it was blue, then it became red. Now we have a wave of red. From a Malaysia perspective, or if you would, sectorial sectors that are winners. sectors which will probably go off risk, counters that are attractive to you at the moment?
Yeah, we kind of look at it the same way Rajiv mentioned before, in terms of thematics. He mentioned banks, he mentioned supply chain participants like the tech sector, and he also mentioned defensives, which are driven by domestic secular drivers. And that's how we're looking at things as well, across ASEAN as well as Malaysia. I think generally we like the banks. I mean, if you're talking about interest rates being stubborn, that's good for bank margins generally. We like Singapore banks, we like Malaysia banks. We also like the Indonesian banks, but the top quality ones like BCA, Mandiri, the ones with the funding advantages. I think they will do quite well. And they have the advantage in Indonesia of a domestic-oriented economy, which should be more resilient to tariff threats. Supply chain, yes, tech companies in Singapore and Malaysia have to be quite selective, though. I think we've made the point that there is a margin story from high US dollar. But there is a less attractive medium-term story for some players. A lot of my heads of research talk about, whoa, it's great, 60% tariffs on China, 10% on us, everything's going to come to us. I'm like, you do realize China is our biggest trading partner and the biggest growth driver in this region. Them being handicapped is not good for anyone. And it is particularly pertinent for the tech chain because a lot of tech companies in Malaysia don't depend on the US market, they depend on the Chinese market and Chinese demand. And that's a big reason why they've underperformed so badly, over the last 12 months. So I think we've got to, sort of pick our battles. A weaker China becoming more self-sufficient as well. The US is going to be, more aggressive. China's going to say, screw you, I'm just going to build my own tech. And that could crowd out Malaysian players as well. So we're very selective. We like stocks like Frontcan, which is more TSMC oriented. We like stocks like Great Tech. A bit more sort of neutral on the others at this point in time. And third is domestic drivers. And this is more in the mid space, small mid caps. So I would look at stocks like CTOS, which has a dominant positioning in a domestic credit rating market. Something like FarmFresh, which has a very good import substitution story, much more relevant now as well, given the stronger import prices from higher US dollar. Something like IT Max in Smart City Solutions, got quite a good grip on that market, and that's going to continue to grow regardless of what happens externally. And of course, something like RE in renewable energy, SolarVest would be on our buy list as well.
Yeah. Thanks, Anand. I'm mindful we do need to pivot into question time, but I have one last question I'd like to pose to all the panel members. In light of what we understand of the President-elect's biases, if you like, or policy biases, is there a magic bullet or magic bullets that Malaysia could do or use to become more attractive to investors? I mean, just moving left to right as the audience, Alex.
I don't think there's anything specific, and as I said, part of that's because there's a lot of confusion out there still. In a way, it's more of the same. What is making Malaysia attractive will continue to make it attractive, and we've covered a lot of that that ground over the course of the session. So I think it really is just that focus. You've got a massive increase in data centers. That's going to be a key driver and a key differentiator versus the rest of ASEAN. In fact, you'll be the leader by 2028. Really big semiconductors, great infrastructure build, focus on areas like the special region around Johor. I think it's just keeping to do that. The more horses you have in the race, the more opportunity.
Thanks, Alan.
Yeah, no, I think exactly as Alex said. I mean, we can't control what's going to happen outside Malaysia, so let's look inward. Like a company, when it can't control what's happening in the market, it looks for internal synergies or efficiencies, and Malaysia should do the exact same thing. Continue the fiscal reforms, continue passing good roadmaps and good policies. Government Procurement Act is a great example of that. Special economic zone, as I mentioned before, try to bring in more elements from ASEAN to make it more robust and more forward-looking. Keep up the anti-corruption drive. I think leakages has always been a problem, not just for Malaysia, but for all of ASEAN. And this is a good time to sort of step up on that. Make sure, we want as optimal and as efficient as economy as possible. And plugging leakages, which is a constant irritation for anyone who looks at Malaysia, should be a priority in an environment like this in particular. So those are the kind of things I would focus on.
Thanks, Alan. Chetan?
From my side, I would say neutrality is quite important, and I think my personal view is not necessarily our house view, is that I think people who are neutral in this US-China, trade tensions or geopolitical tensions will prove to be the ultimate winners. And I think what Malaysia should avoid is to get sucked into these tensions and play a diplomacy game. I think some countries do quite well, and they've quite successfully done that. I think Singapore is a great example. I think India is doing a great job. I mean, you think about India, they're part of Quad, they're getting cheap Russian oil, and they're still, all these. So I think that's quite important. And also, they have to understand that, look, this is 4 years, and this is it, right? I don't think so Trump can come back. So, don't antagonize US. It's quite tempting to get, to antagonize US. They have to play the long game. So I think being neutral is very, very important.
Neutrality, BRICS. We've just joined BRICS, of course. Do you think red flag to a bull, so to speak? And the US could retaliate through import tariffs and so on? Paraphrasing someone's question.
Well, I'm not too sure if they will retaliate. I mean, actually there are problems with BRICS as well, by the way, which is a separate point, because I'm not too sure what is really the core objective. It's not a trade pact. It just seems to me it's just a club of very, very big countries, India, China, all that stuff. And
sort of like the G7, but south.
Exactly. I mean, it's like the South or the G7, G20 equivalent. But so, and what I've been reading, it seems like US just doesn't care, right? I mean, I think there's a lot of emphasis on like using a different currency. I think that seems to be like core. I'm not too sure if they've really clearly articulated that. So, but again, if you look at trade and all, 80% of global transactions are still US. I don't think so they can really wean off US dollars so easily. And there's just so many, I guess, disagreements even between the BRICS members, right? In fact, if anything, if the disagreements would disappear and somehow they come up with some sort of a consensus, I think that's when the US may actually look to retaliate. I think we are still, my personal view, we are still years away from that. Yeah.
Well, thank you. So clearly you've got the pivot, so we've got more tax cuts continuing in the US, which are then offset using tariffs. Now clearly that's not a strong thing for world trade. Risk, long-term risk, or we're not quite sure really. We've got 4 years and we'll just see how it pans out. Any specific thoughts, gentlemen?
I mean, the thing that I would love to play now is the what if. And the biggest what if in the room is, what if China decides in the first quarter of next year to massively fiscally stimulate, to try and drive consumption domestically, and just to say, okay, we recognize we've got the highest savings rate of domestic China ever. We have a lot of dry powder, therefore. How do we get that deployed? Median Chinese wealth is mostly tied up within property. What happens if that does get deployed? What happens if they start spending? Does that create a different dynamic? Does it create channels within Asia? We've talked about Malaysia being a big trading partner with China. Does this change the prism of reference? Because does it mean that tariffs become less of a problem?
Devaluation of the yuan?
All different areas, but I think the point is here that there is going to be something out there that is the what if.
If you look at the what if, massive stimulus versus aggressive devaluation of the yuan, one worries me more than the other, to be honest. Well, did you have a feel or thoughts, Alex? Which way?
I'll take a little bit, and I suspect my colleagues on the panel will have some views around the yuan. I don't think intervening or fiddling with currencies ever ends particularly well. We've got plenty of evidence of that. Whereas I think there is a universal belief that we didn't see enough from the first stimulus package that we saw from China. So we get a 25 to 30% market reaction, and then we've had a dribble back with everybody saying it's great, but you've focused it on a bit of kind of moving of intra-trade and getting a little bit of the stock market going and big institutions going, but you haven't got the money off the sidelines. So you have to instill more consumer confidence and you have to get the money off the sidelines. So that, for me, would be the fascinating what if. That would be the bit that would move the conversation quite dynamically because it would address a lot of the questions. So, that would be the focus for me. I don't think necessarily devaluation just becomes a currency play and is open to manipulate, changes on both sides.
Anand, anything to add?
No, I mean, definitely a massive fiscal bazooka from China would be a game changer of sorts from the current narrative, where we're all just waiting for tariffs and currency devaluation. Definitely much more preferable for Malaysia as well, as I mentioned, given the linkages with China. And, yuan devaluation, the two currencies we feel which are most vulnerable to that, ringgit and Thai baht. Yeah, so it won't serve us very well.
Yeah.
Yeah.
Now, I would just pose one last question while we have time to all of us. Looking forward, as we go forward, top 3 priorities should be in terms of global positioning and trade relations as an outcome of the election. Chetan? Or just one will do?
Well, we are in the process of writing our formal year-ahead outlook. I mean, it's a tricky one.
This must have been from one of the Nomura guys.
So I'm gonna stick to our current published views. I mean, I would say, I don't want to get into any compliance troubles, but
Chatham House rules.
But I think on a multi-month view, I think focusing on domestic areas, will possibly generate some outperformance, right? I mean, you can have banks, you can have telcos, you can have select utilities, you can have Thai tourism, medical, all that stuff. You can have stuff in Asia, India, and all that stuff. I think exporters will probably have a problem. I think that's, to me, one clear one, right? I think generally as a region, a bloc, India plus ASEAN, and you can structure the way you want to, will probably do okay, right? I think that would be the two ideas, I think, right? I just want to have one quick comment on the risk part, right, the first one. I mean, I think there is a lot of consensus views out there. I mean, markets are also about like what's already priced in. I think we should also think about what can potentially go wrong. And I think the other thing, I think Rajiv made that point. I mean, sequencing of policies is very important. I mean, whether Trump does 60%, 60% will be a huge risk-off event. I mean, I think there'll be all sorts of exemptions there. There'll be carve-outs there. We've got like Elon there. He's got big business in China. So, once the market has more clarity, it's quite possible there is an upside risk rather than a downside risk. So I think we need to also think about that. It's very easy for us to take a very cautious stand. And it's quite possible within a month or a couple of months, everything will be priced in negativity. And what you will have is a positivity. So I will take a more balanced view, but domestics, generally speaking, are better, I would say.
Anand?
Yeah, no, I would say Malaysia, focus on our internal drivers, keep the fiscal consolidation on track, execute on the blueprints. They're really good blueprints. You just need very good execution. Try to pick up the pace on anti-corruption measures. I think that's something that's always well received by investors. Not to the extent of, it's like what Vietnam is doing that paralyzes, administration, but, in a steady pace manner. Execute well on things like the special economic zone. These are all internal drivers. It doesn't matter what the US is doing. These are things that can generate growth for Malaysia, regardless of what's happening on the trade front. And, my personal favorite is sort of start retreating from involvement in government, in business, government, get out of business. Because the private sector can do it better, faster, cheaper. So I think that should be a long-term goal of this administration as well, to start reducing government involvement in business.
Thanks, Anand. Alex?
Yeah, I mean, short term, I think, as we alluded to before, focus on defensives. Think about the areas of the economy that will be able to withstand the initial volatility that we see. Medium term, trust in the themes. We've got a big opportunity out there, and valuations are supportive of the idea that there's still plenty of upside. So definitely a case of trusting the stocks in a portfolio, researching them well, putting the effort in, but then really understanding that there is still a longer term trajectory out there rather than just some of the shorter term headwinds.
Thank you. Roshan has gone back to the rostrum. I have a little red light flashing.
You can take a few more questions if you want. I think we've got one more.
One more. Well, it's okay. We've covered majority. We've had a fairly wide-ranging conversation, Roshan. We've covered most of the things. So as we traditionally do, Alex, Anand, Chetan, thank you for joining us today. If we could have a round of applause.
Gentlemen, don't leave the stage just yet. We're going to take a group photograph, so I'll leave it to the photographers to direct y'all. But thank you very much for a very insightful and entertaining conversation, actually. Thank you very much for the laughter. Ladies and gentlemen, that was Datuk Muhamad Umar Swift, CEO of Bursa Malaysia, that moderated the panel with our guests today. We had Chetan Seth, Asia Pacific Regional Equity Strategies at Nomura, Anand Padmakanthan, Head of Regional Equity Research at Maybank Investment Bank Group, as well as Alexander Davey, Head of Client Portfolio Managers at Eastspring Investments. Now, once the photos are done, we'll be taking a 10-minute break. I've been told to let you know that we have restrooms located at the listing gallery, but also restrooms are available upstairs in the business center, just one floor above. Ladies and gentlemen, 10-minute break. We'll see you back here at 11:45.